What if I told you there are three stocks under $5 that everyone's written off as dead, but they could be preparing for massive comebacks? The original meme stock that survived bankruptcy, a Bitcoin mining powerhouse ready for the next crypto bull run, and a commercial electric vehicle company nobody's heard of yet. These aren't safe plays, these are comeback kings trading at crisis prices. Hey everyone, welcome back to the channel. I specialize in finding turnaround opportunities before the crowd catches on. This isn't financial advice. Do your research and never invest what you can't lose. Let's find these diamonds in the rough. Before we dive into these comeback stories, quick challenge. If this video hits 50 likes, I'll know you want more turnaround stock analysis like this. So smash that like button right now. Let's hit 50 likes together and find the next big recovery. Our first stock is AMC Entertainment Holdings, ticker AMC, trading at just $1.61 per share. Yes, the AMC, the original meme stock that captivated the world in 2021. And while the hype has died down, there might actually be a real investment case emerging here. Let's get the bad news out of the way first. AMC has gone through dilution, reverse stock splits, massive debt, and the stock is down over 95% from its meme stock peak of $72. The company faced bankruptcy, restructured their debt, and retail investors, the famous apes, have been crushed. This is a cautionary tale about hype versus fundamentals. But here's the turnaround thesis. AMC survived. They didn't go bankrupt. They restructured billions in debt, extending maturities and reducing interest payments. They have breathing room now to execute a recovery strategy. The movie theater business isn't dead, it's evolving. Yes, streaming has changed entertainment consumption, but theaters still generate billions in revenue. Big blockbusters like Barbie, Oppenheimer, and Marvel films prove people still want the theatrical experience for event movies. AMC gets a huge percentage of those box office dollars. AMC is diversifying beyond just ticket sales. They launched AMC credit cards, expanded premium formats like IMAX and Dolby, improved food offerings with dine-in theaters, and they're even selling their popcorn in retail stores. They're trying to become an entertainment and hospitality brand, not just a movie exhibitor. The key question is, can AMC generate enough cash flow to service debt, invest in facilities, and eventually return to profitability? Management says yes. The box office is recovering toward pre-pandemic levels, cost-cutting has improved margins. If they can stabilize the business, this beaten-down stock has serious upside. At $1.61, AMC is trading like it's going bankrupt again. But if the business stabilizes and eventually returns to modest profitability, fair value could easily be $5 to $8 per share. That's 3x to 5x from current levels. If meme stock fever returns, who knows how high retail could push it. This is pure speculation on a distressed turnaround with binary outcomes. The business could deteriorate further, debt could become unsustainable, or streaming could accelerate theater decline. You could lose everything. But for risk-tolerant investors willing to bet on the movie theater experience surviving, AMC at $1.61 is an interesting lottery ticket. Small position only, maybe 5% of a speculative portfolio. Now let's talk crypto leverage. Moving to our second stock, Bitfarms Limited, ticker BITF, at $2.95. Bitfarms is one of the largest publicly traded Bitcoin mining companies, and they're positioned perfectly for what could be the next massive crypto bull market. Bitfarms operates Bitcoin mining facilities primarily in Canada, Paraguay, and the United States. They have thousands of mining rigs running 24/7, solving complex mathematical problems to earn Bitcoin rewards. When Bitcoin's price goes up, mining becomes more profitable. When it goes down, miners get crushed. It's pure price leverage. Here's the setup. Bitcoin just went through its halving event in April 2024, which historically precedes major bull runs. The halving reduces new Bitcoin supply, creating scarcity. If demand stays constant or increases while supply decreases, price should rise. That's basic economics. Bitcoin is consolidating in the $40,000 to $50,000 range. Institutional adoption continues growing, with Bitcoin ETFs now trading. Countries are accumulating Bitcoin as strategic reserves. The macro setup, potential Fed rate cuts, inflation concerns, geopolitical uncertainty, favors Bitcoin as digital gold. Bitfarms has been smart about positioning for the next cycle. They've upgraded to more efficient mining hardware, secured low-cost power agreements, electricity is the biggest mining cost, expanded facilities in jurisdictions with favorable regulations, and they're holding Bitcoin on their balance sheet instead of selling everything. The company also generates revenue from high-performance computing services, providing diversification beyond pure Bitcoin mining. This HPC business could become increasingly valuable as AI compute demand explodes. Here's the leverage thesis. When Bitcoin rallies from $50,000 to $100,000, which many analysts predict for 2025, Bitcoin mining stocks don't just double, they can 5x or 10x because profitability increases exponentially. Bitfarms at $2.95 could easily hit $15 to $20 in a full Bitcoin bull market. The risk is obvious. If Bitcoin crashes, Bitfarms crashes harder. If electricity costs spike, if regulations tighten, if mining difficulty increases too much, profitability suffers. This is extremely high risk, high volatility investing, tied directly to crypto prices. At $2.95, Bitfarms is cheap compared to its infrastructure, Bitcoin holdings, and mining capacity. For investors who believe Bitcoin is going significantly higher in 2025-2026, Bitfarms offers leveraged exposure at an accessible price point. Position accordingly, this is speculation on the crypto cycle, not a stable investment. But now let's look at something completely different, commercial electric vehicles. And finally, our third stock is Envirotech Vehicles, Inc., ticker EVTV at $3.55. This is the dark horse of our three picks, a micro-cap company building electric commercial vehicles that almost nobody knows about yet. Envirotech Vehicles doesn't make consumer cars. They focus on commercial and fleet vehicles, electric delivery trucks, step vans, utility vehicles, buses, and specialty vehicles for last-mile delivery, municipal fleets, and commercial applications. Here's why this matters. The commercial vehicle electrification market is huge and underappreciated. Everyone talks about Tesla and consumer EVs, but the real transformation is happening in commercial fleets. Companies like Amazon, FedEx, UPS, and municipalities are mandating fleet electrification to meet sustainability goals and reduce operating costs. Electric commercial vehicles have compelling economics, lower fuel costs, lower maintenance, fewer moving parts, government incentives and tax credits, and they help companies meet ESG commitments. The total cost of ownership favors EVs for commercial applications, especially for vehicles with predictable routes and charging infrastructure. Envirotech focuses on Class 3 to 6 commercial vehicles, the medium-duty segment that's perfect for urban delivery, utility work, and municipal services. They're not competing directly with Tesla Semi or Rivian's delivery vans. They're targeting a specific segment with purpose-built vehicles. The company has partnerships and customer pilots with various municipalities and commercial fleets. They're still early stage, ramping production and proving their technology in real-world applications. Revenue is limited but growing as they deliver more vehicles. Now, full transparency, at $3.55, EVTV is a microcap with significant execution risk. They need to scale production, secure financing, prove reliability, and win more customer contracts. This is early stage, speculative, and could fail. The commercial EV space is getting crowded with well-funded competitors. However, if Envirotech can establish themselves as a credible player in commercial EV, capturing even a small percentage of this multi-billion-dollar market, the stock could easily 10x or more. We're talking about a company valued under $100 million trying to participate in a market worth hundreds of billions. My view? EVTV is a calculated bet on commercial fleet electrification with an under-the-radar company that could be acquired by a larger player or scale into a significant business. Extreme risk, but the commercial EV thesis is sound, and being early on an unknown player could generate outsized returns. At $3.55, this is lottery ticket territory. Small position, maybe 3 to 5% of a speculative portfolio, betting on the commercial EV revolution lifting all boats, and Envirotech being one of the survivors. Now let's talk strategy. So there you have it, 3 turnaround and comeback stocks under $5, representing completely different opportunities. AMC fighting for movie theater survival at $1.61, Bitfarms leveraging Bitcoin's next bull run at $2.95, and Envirotech building the commercial EV future at $3.55. I want to be brutally honest, these are not safe investments. These are speculative, high-risk bets on companies that have been left for dead or are in early stages with uncertain futures. You could lose 100% of your investment in any of these. But here's the flip side. The market has priced in almost complete failure for all 3. AMC is trading like bankruptcy is imminent, but they survived and restructured. Bitfarms is depressed despite Bitcoin's strong positioning, but the next bull run could change everything. EVTV is unknown and unloved, but commercial EVs are inevitable. My allocation strategy for a $5,000 speculative portfolio: 40% Bitfarms for crypto cycle leverage, highest conviction, 35% AMC for meme stock recovery potential, 25% EVTV for commercial EV dark horse play. That balances the 3 different risk profiles and catalysts. These are long-term speculative holds. AMC needs years to prove the turnaround. Bitfarms needs Bitcoin to rally. EVTV needs time to scale production. You're betting on multi-year transformations, not quick flips. So here's my question for you. Are you a contrarian investor willing to buy what everyone else is selling? Which turnaround story resonates most? The meme stock redemption with AMC, the crypto leverage with Bitfarms, or the commercial EV dark horse with Envirotech? Drop a comment and let me know your strategy. Did we crush that 50-like goal? Let's check. If we did, you're absolutely amazing. If we're close, hit that button right now. Subscribe for more turnaround stock analysis and share this with contrarian investors who see opportunity where others see disaster. Remember, fortune favors the bold, but wisdom protects the bold from being reckless. These are calculated risks, not blind gambles. Do your homework, size positions appropriately, and never invest more than you can afford to lose. Thank you for watching. I'll see you in the next one. Now, go find your comeback kings. Peace.